So, what is technical analysis? Very simply put, it is self-fulfilling prophecies. Um, we put price patterns and then try to predict future price movements based on historic price patterns. Um, some people will claim that technical analysis is able to predict with a reasonable certainty the direction of a stock price. However, historically, financial theory always argues that price return or stock price or daily returns are random walk. And because it's a random walk, you really cannot predict future returns. However, so let's put in a moving average, for instance, and then let's talk with an example or over an example. So let's do a moving average of 200 days, which is considered to be a long-term daily moving average. So I'm using a website called tradingview.com because it's free. I'm using a stock, Apple, and daily prices. This red line here is your moving average of 200 days. Now, it simply is the average price for the past 200 days. And with every moving day, that 200-day window gets updated. A new price comes in, the oldest price drops out. Now, based on that, the price right here is about $186. The 200-day moving average is $186. On the very same day, the actual stock price is $227. Now, you can see that the price has been trading above this 200-day moving average for such a long period of time. And based on the self-fulfilling prophecies, if everybody believed that the price was trading above this, and so much so that people feel that this is an overbought territory, it will make them uneasy, and it will make it much easier for people to convince themselves to sell and get out, realize their profits, and move out. Now, if you have enough people believing this, and if you have enough people actually acting on this belief, then you're going to have the price to descend. Now, it's very hard to believe, obviously, that this descent is because of this technical indication. In fact, at around that time, S&P 500 was descending as well, and therefore Apple was one of the companies that had a very high correlation with the S&P 500, and therefore Apple actually dropped because the S&P 500 was dropping, or Apple was one of the companies that dropped within the overall market movement going down. However, the technical analysis side of this, that almost every company at that time was trading at such an overbought territory, significantly higher than their ongoing long-term moving averages, this descent was made easier with the belief that the price was already overbought. So just to emphasize, I'm not claiming that technical analysis is able to predict the future returns, although some people do. They simply come up with new models, 200-300 different models, theories, and empirical series, and regressions, and all sorts of econometrics, and then they try to forecast. Now, I'm sure that at some level they have some sort of a forecasting ability, although it's really hard to believe. But even so, how long can it persist? Because once you start trading on that forecasting method, then everybody will start to trade on the same forecasting method, and it will arbitrage itself away. So even if there is a technical analysis that's able to predict the future movements, it won't last long, because everybody will notice it and everybody will start trading on it, and then the technical analysis rule that seems to be working will cease to exist. However, if everybody believes a certain technical analysis or a certain technical indication is, it's a strong one, it works. In the past, it seemed to work. and everybody has this belief and they're convinced that that's a strong technical analysis indicator, then it will make it much easier for people to act on this. And as people start to act on it, it will become a self-fulfilling prophecy, and then it will start to have a ripple effect. Meaning, if the 200-day average is right this red line, and Apple and almost every other company in the market is trading on such a extended overbought territory compared to the moving average, it just takes a few traders to start this. I've had enough. We're already overbought. I'm going to take my profits and move down, move out, and they will drive the price down. Now, as the price starts to come down, you will have more people to jump on that bandwagon. And then if you have enough people who believe in this, and then enough websites and newscasts that actually make people believe into this phenomenon, then price will descend faster. Now, at this point, we are oversold. Now, if everybody believes that we are oversold, then obviously we will have people who start to buy it back up. And as we back it up, then you're going to have people who are believing that this is overbought, and you get the idea. Now, let's do a very simple, another one. Let's do a Bollinger Band. Now, this is a very simple one, and everybody uses it for decades now. Because it's so simple, everybody uses it. Does it work? I don't know, but it gives a very nice range of trading price. In fact, let's define this. Let's have a length of, say, 50 days. We'll use this standard closing, and then let's use a standard deviation of 2, which will simply give us a range. This is your moving average of 50 days, and then this is the 2 standard deviation away from or higher than the moving average, and this is the 2 standard deviation lower than the moving average. Meaning, if we believe that a certain level is overbought and certain level is oversold, then this 2 standard deviation around that moving average may be one of those ranges where we could define as overbought or as oversold. Now, in this case, if it is overbought, just like here, it breaks above this upper band, then you would expect price to descend, just like right here, just like it did. Another one, and it did. Another one, and it did, and so on and so forth. So you have not necessarily an immediate reaction right around here. You don't see an immediate reaction, but you do so right around here. You do so another one here, another one here. It's all about what people believe, and therefore turn this into a self-fulfilling prophecy. So the technical analysis is trying to predict the future prices based on trying to predict investor behavior. If everybody believes in certain technical indicator, then they will make it so, and they will act on it. And as they act on it, can you predict what they're going to do? As you can predict what people are going to do based on that indicator, then you can predict future prices. That's technical analysis. We have so many different, technical analysis tools, but which one is more popular is your target. Some obscure technical trading filter rule that no one heard about won't have the same impact for the self-fulfilling prophecies, because simply you won't have enough people trading on it. In my opinion, you would have a better chance of trying to predict future returns or prices based on the most popular and most common technical analysis tools. So that's it. Thank you.